بسم الله الرحمن الرحيم. اللقاء الفات we talk about the cash flow statements and the main parts of the cash flow. الأجزاء الرئيسية في الكاش فلو. the cash flow statement includes three main steps. The first one, cash flow from operating, cash flow from investing, cash flow from financing. Then you have the in the cash flow balance. Just I'm revising the cash flow statement. The operating activities represent the company's core business, including sales and expenses. Basically, any activity that affects net income for the period. يعني احنا بنيجي أول شيء بنجيب النت income. Then any changes in operating. Any changes. فبنروح على قائمة uses and sources. بنشوف the changes. For instance, account receivable. What is the change in account receivable and how it influences on the cash? You talk about the inventory and so on. Then, after you finish, you see the cash flow from operation. So the cash flow from operating, including the net income, which is the main important item. Then any changes in the operating. What is the operations? You will see what are the items in operations. Now, the operations includes it changes in current assets. It changes in current liabilities. Okay? Now, just one example on this. See inventory. Inventory in 2009, in 2010. This is very simple example. If it is 84, then it becomes 53. So what is the implications on the cash? So it is source. Source 84. So okay, 84, 53. How much? The difference. 84 minus 53. 31. Now, think on the 31. Just understand the main rule. 31. Is this increase the cash or decrease the cash? Increase.
This is a source.
Okay, so then here is the income. Then write inventory. Increase in inventory by 31. Very simple. Now take the account receivable. The account receivable was 43, then it become 61.
Increase.
Look at it is used by how much?
22.
22. Okay, so 22 decrease. Now go to the cash flow statement in here. So decrease in account receivable 22 by minus, because this decreased the cash. This increased the cash, and this decreased the cash. Increase in inventory, sorry, here decrease in the inventory. Yes. This is decrease in inventory, and this is increase in inventory. Okay? So increase in account receivable, because this is increase, 19. Are you sure this 61? Okay, so 19. Take another example now.
Minus, it's increase.
Here, increase account receivable. What is the implication on cash? Is this increase the cash or decrease the cash?
Increase.
Are you sure? Go back to the account receivable. Account receivable was 43. then it becomes 61. So it means it is use. So because it decrease the cash. You use more cash in the account receivable. 43 increase 61. It means more cash withdraw from the business.
Withdraw.
Yes.
طب increase
ارجع للرول. Asset is equal liabilities plus equity. Any increase in assets, use. Pay attention here. Any increase in assets, use. The use decrease the cash.
Yes.
Now, this is increase in assets. So it decrease the cash. So it decrease the cash.
So when we say increase, we mean in assets, not the cash.
Sorry?
When
No, yes, increase in account receivable.
Yes.
Be careful, increase in account receivable, not increase in the cash. Because there is increase in account receivable, it decrease the cash. Take another example here. Another example. Accounts payable. 2009, 2010. 2009, 2010. 2009, let's see, 75. Okay. And here 86. So it is source by 11. Now ask yourself, what is the implication on this, of this on the cash?
decrease the cash.
لا increase
شوي حكينا هلا ايه source يبقى increase the
Source.
source
The source of what?
cash.
Source of cash. It's mean increase the cash. Use of what? Use of the cash. So it decrease the cash. So here is source of cash. So just move this account receivable, account payable, increase in account payable by 11. It increase the cash. It increase the cash. Okay, be careful. Okay? So, okay, this is operation. This is operation. After you finish the operation here, just you sum this. Let's talk about the investment activities. Investment activities. The cash coming from the investments. From where it's coming, is coming, as I said before, coming from the fixed assets. Any changes in the fixed asset considered as investment decision. So the investment activities is related to the changes in the cash flow coming from the changes in the fixed asset. This is the investment. If you read it here, include the cash flows that arise out of the purchase and sales of long-term assets. What is the long-term assets? It's the fixed assets, such as plant and equipment. Take this example again. We have here in equipment 2009, 2010. And it was 150, it becomes 250. So I just one guy to help me and state, is this source or use? Then what is the implication on cash? Okay, one on the behind. Okay, what this? Yes, carry on. How much? So it is used by 100. So what is the implications on the investment in the cash flow? Decrease. So here is increase in equipment. So it is 100 by this, between brackets. Okay? Because this is use. Because it is use, it is using of cash. Use is using of cash. You are spending cash. How you spend the cash? The machines was, or the equipment was $150. It becomes 200. It means you bought new machines. Because you are bought new machines, it means you paid more cash. You paid out. You paid out more cash. Paid out more cash, 100. So 100 is here in investments. Okay, another example here. Land, it was 340, then it becomes 300s. Now, it is source by 40. It means we sold land. So this is source. So increase in land, 40, increase cash. Look at here. 340 becomes 300.
Source.
It is source.
Source. Is it source?
Because it is source,
Increase.
it increase the cash.
But increase the land.
Decrease the land. 40, increase the cash. Okay? Take another example. Let's see, for instance, machines. Machines. 2009, 2010. The machine was 510 and it becomes 510. So no change, here no change. Okay, so this is the investment. Yes, depreciation is treated as liabilities. So any increase in the depreciation is treated as the cash source. Okay? Sorry?
Gains and losses is not like
Gain and losses. The income is income. Look at the income here. This is the gain and losses is summarized in the income statement. So you take the result of the income and put it here. Then you do the changes. The changes in the operations, the changes in the investments, then the changes in finance. Then you sum them, 40, 60, so you have 60 minus as investment. The cash flow coming from the investment is minus 60. Now, finance. Financial activities. In financial activities, again, the financial activities is related to the long-term liabilities, related to the equity, and we add the short-term loans or short-term notes. Financing activities represent changes in the firm's use of debts and equity, such as issue of new shares, payments of dividends. See this example here. Loan in 2009, 2010. It was 2009, it was 250, it becomes 270. Now, in this area here, tell me, is source by 20. So in finance, we see this is increase in loan by 20, which is cash inflow. Okay, another example. We talk about the equity or shareholder. Shareholders was 370, 390. or 3 or 400s? Use? Are you sure? Source. Equity. Liabilities. Okay, so 30. So increase in equity or shares by 30. So it is cash inflow. Okay, after you finish, you sum them up. You sum the income statement, the income with the finance coming from, the cash flow coming from the investment, cash flow coming from the operations, cash flow coming from the investment, cash flow coming from finance. So you sum them up and you take the result. So look at this example in here. Look at here. This is the same example of the uses and sources when we talk about uses and sources. And this is 204.75 is coming from the income statement. جاي من income statement. If you go back, إذا إحنا رجعنا هتشوف ال 204 من وين جاي. Just when we revise this. Go back. Okay, so 204. What is this? Is balance sheets. Where is the income statement? The balance sheets. Okay, this is the income statement. Okay, where is net income?
Net income.
Yes. Look at the net income. The net income for 2010 is 204. 204. So this is coming from this. You include this in the cash flow statement, and then you carry on. Then you are looking at the changes in the operation, you are looking at the changes in the investment, and you are looking at the changes in the finance. Okay, we go back to the rest. Okay, no. Look at the changes. Just remind these changes. Look at the changes. So we have in account receivable, it is 22.5. Is this use or source? It is. Be careful. Look at this carefully. It is use, not source. Because 139, it increased by 162. So it increased by 22.5. So it is, this is use of funds. So it decreased cash. It decreased cash. Okay, we'll see. Look at here. It decreased cash. It is, this is take the minus. Look at the inventory. It is the same. Let's go back to the inventory and see. Observe the change. Go back to the inventory. Look at the inventory. It was 229. It increased to 378. It means increase. So increase, it is use of funds, so it decreased cash. Just think on this way. Okay, just go to see the inventory. Okay, look at the inventory. Increase. No change in the other current assets. Depreciation. Look at the depreciation. As I said, depreciation is treated as liability. So any change or any increase in the asset in depreciation, it is a source of cash. Source of cash. Uses of cash. Careful. Source of cash and uses of cash. Okay, let's go back. Okay, look at the depreciation. Depreciation 382, it becomes 517. So the difference is source 135 because it increases. However, it is take minus or negative sign in the assets, but it is treated as liabilities. So any increase in the depreciation considered as a source of cash. Okay, be careful. I'm 100%. Some students, they will get confused. 100%, yes, I know. Wala. Just this is revising. Okay? Let's go back. Yes. Increase in accounts payable. You want to go back, or it's fine?
No,
It's fine. So you sum up all of these. You end cash flow from operating activities is 173. Just bear your mind. Bear your mind, that's the most important part in the cash flow statement is the operation. If the operation failed to generate cash, it means we have problems or challenges. Because of what? Yes. And because the sales or the income is the main source of cash. So if the income or sales fail to generate more cash, who will generate the cash? Okay, who? The investment? You are selling machines to provide cash? Or you are asking the shareholders to give you cash? So this is the important. So this part is the most important part in the cash flow statement. And the creditors, the banks, are looking at this part. Okay? Now, let's carry on. Let's go back to the uses and sources. We said looking at the fixed assets is the investment opportunities. Look the changes to the fixed asset. What is the changes? The changes, we have gross planned 169. So 175 is the difference, the change. So this is uses or sources? Uses of cash. Yes, just write this down. Okay, so you have 175.50 is uses of cash. So we put this under operating or investment or finance. Where you put this? Investments. Okay, let's go down. Accumulative depreciation, we treat this. Let's go down to the net plant and equipments. So it was 128.7, 132.7, so it increased by 40. So it is use. So we have two use now, two uses of cash. Okay, let's go back to the cash flow statement. Okay, be attention. Cash flow statement, C. And investment activities, we have 100 purchase of plants, 175. Okay? Which is related to the... yes, the gross, yeah. You recorded 175. Yes, okay, the same. Because we treated the depreciation expenses as operation. Okay? Okay, and now let's go back to the finance. In which area in the income statement, in the balance sheets, we are looking in finance? We are looking at equity and liabilities. Okay? Go back to this. Okay, what is the changes? Now, the question to you. Where is the changes in the finance? Just look at the finance. Account payable is short operation. Okay, the second. The expenses, this is short operation. Look at this. Short-term notes. Short-term loans, short-term notes or loans is finance. You see, or when I said in exception, short-term notes or short-term loans, it's treated as finance. So what is the changes? It decreased by 9. No, it is use. So it reduced cash by 9. Yes, write it down. This is the first. The second. Long-term debts. Long-term debts, it was 720, it becomes 771. So it increased by 51. It is source. Write it down. Okay. Common stock equity. Common stock by bar value is 45.45, no change, 0. Paid in capital, and I explain what it means paid in capital. So 324 becomes 324, there's no change. Retained earnings, 382 becomes 542, increased by 159, so it is source of cash. Write it down. And this is the thing. So I think we have 4 items, or 3 items. So we have from short-term notes, 1. We have the long-term debts, 2. And we have paid in capital or retained earnings, 3. And others are no change. Okay. Go to the cash flow statement. Look at these 3 items. Increase in short-term notes is... What is the mistake? Yes, this is increase in short-term notes. So this is decrease. Yeah, so it's 9. Decrease the short-term notes. Okay? So the increase in short-term notes, this is decrease the cash. Increase in long-term debts, increase the cash. And cash dividends paid to shareholders. This is something in the notes. In dividends, there is something in the notes about dividends, 45 for the shareholders. Okay, so now the cash flow from financing activities is 2.25. Increase, decrease in the year. You just sum all of these things with, and you end with $90. For the retained earnings, just for retained earnings, if you look at the retained earnings, we are not recording the retained earnings in the cash flow statement. Why? We recorded the dividends. Retained earnings, look at the retained earnings, go back. Okay. The retained earnings is 382 and 542. Okay, it has a special treatment. Let's go back to the income statement. Sorry?
There is an amount of return earning we invest in the company.
It has a special treatment. We talk about this in the beginning of chapter 3, but just remind you on this. In the income statement after having the results of the income statement, for instance, we have $100,000. For instance,
Yes.
now we think on 2 ways: to pay them out as dividends, or to retain earnings. Retain earnings. Okay? Now, if the company decided in doing like this, 30,000 and 70,000 for retain earnings, 30,000 for the dividends, and retain earnings for $70,000 in the retain earnings. Now, my question to you: what is the implications of these 2 figures on the cash flow? Retained earnings has influence on the cash flow, or the dividends? Which one? Dividends. Because dividends has a real cash out. But retained earnings is like book value, or let's say the things in accounting, just move this figure to the retained earnings. Move a part of the income to the just accounting. But in here, dividends, you have to pay something to the investors or to the shareholders. So this is why in the paid in capital, we recognize, in the retained earnings, what is it? In the cash flow statement, we only recognize the dividends. We are not recognizing the retained earnings because there is no cash paid in the retained earnings. However, in the dividends, there is a cash paid out to the investors. So be careful on this point. So here, retained earnings. Okay. Go to the just sum the 159 plus 45. How much? Sum them. Huh? Is this reminding you with something? What is the summation of 159.75 204 point what? 0.75. Okay. Is this number remind you with something? This is the net income. Yes? Yes or no? Yes. Yeah. So this is the retained earnings, and this is the dividends. Okay. Go back to the net income. What is the net income?
Difference between
Yes. This is the difference between the net income and the retained earnings. Sometimes, be careful. Sometimes I'm not giving you what is the dividends. I'm not giving you the detail. Now, consider this situation here. Yeah. This is, I uncover this. Sorry? I know this. But the problem is in the exams, you say, oh, where is the dividends? Ask yourself. And you know, people, when they are busy in the exams, they don't have a space in their mind to think. You know this? So you don't have room to think. Oh, just, okay, talk to your teacher. Okay, what is the, oh, it's just try to drive. Oh, you didn't tell us about this. But the dividends, I shouldn't tell you what is the dividends. You have to drive it from the statement. Yeah, so the retained earnings. Sorry?
Net income minus the...
Very simple. Income is equal retained earnings plus dividends. So we already know about retained earnings and we know the income. So the dividends is equal income minus retained earnings. And you see here. We already know about this. We have 204.75 minus the 159.75. So we end with 45. So this is from where the dividends is coming in the income statement, from the income statement. Okay? Again, you don't need to confuse yourself. Just this is the some calculations. You know the dividends. Okay, so the last one. Okay, so we have 173 is from the operation. We have 175 from the cash flow investments, and we have 2.25 from the cash. Now look at the cash flow statement. Look back at the cash flow statement and focus on these three figures. 1, 2, 3. What do you think? What do you think? What do you think? I will send you a file about the cash flow analysis, cash flow state, particularly in the cash flow statement, and to see the policies of the cash flow management. It gives you more lights, more explanation for the cash flow statement. So what do you think? Look at these three figures. The first one is 173 is the cash flow operation. Now, this cash flow is investment. Now the question, from where the cash coming from to buy machines and equipment is coming from operation. But we may face problems because the cash is not covering all of the investments. So it will be in minus. This is greater than this. So if you are a bank manager and this company coming to you asking, okay, we need more loans, so you may not giving them more loans because the operation cannot generate more cash to cover the investments and to cover the cash flow from the finance. Okay. You can do the checkpoint and you can ask Ms. Noor to do this with you. Okay, we finish this part. The cash, the chapter 4. Let's go to the chapter 4. Just give you introduction about chapter 4. Sorry. Chapter 4. Chapter 4 talk about financial analysis, sizing up firm performance. This is the chapter about the financial analysis, and it focuses on the importance of financial analysis, what are the financial analysis tools, and the limitations of financial analysis. The main learning objectives, principles used in this chapter, and why do financial analysis, using financial ratios, selecting performance. This is the learning objectives. Learning objectives explain what we can learn by analyzing a firm's financial statement. What is the importance of them? Then use common size financial statement as a tool of financial analysis. Common size, it means we are standardizing the financial statement. Standardizing, it means to see the importance of each part in the financial statement, or to see the contribution of each item in the balance sheet, income statement, and the cash flow statement. Why we call this is common size? Common size because we can compare between two companies with different size. This is why it is common size. So if we have big companies, we can compare them with the small companies to see the comparative analysis between the two companies. And number 3, calculate and use comprehensive set of financial ratios, which includes liquidity ratios, profitability ratios, leverage ratios, gearing ratios, stock market ratios, and activity ratios, to evaluate companies' performance. Select an appropriate benchmark for use in performing financial analysis. So this help us how to generate benchmarking. For instance, compare ourselves with the history, or compare ourselves with the competitors, or compare ourselves with the industry. So these are benchmark to compare our performance with other competitors or the industry. Describe the limitation of financial ratio analysis. It means these ratios cannot give you the full picture of the business. So we need other tools to help us to understand more about the financial analysis. Because the financial analysis giving you a static point of view. A static. It's in a particular period of time. It doesn't give you the future, what is going in the future. It just give you something in the history. This is the one of the limitations of the financial statement. The principles used in this chapter, we use 3 principles. Money has a time value, and I explained this. There is a risk return of trade-off. Cash flow are the source of value. And principle 4, market prices reflect information. Okay, tomorrow, on Saturday, we will start in giving details about why do using financial analysis. Okay, so inshallah see you on Saturday and have a weekend. يلا يعطيكم العافية.